Hey there, pro traders, and welcome to another Monday market review held by GoPro Trading Academy and presented by yours truly, as always, Ian Giffen. So, just a quick comment, I guess, before we jump into the different instruments that we're looking at this week. It's fair to say that the really choppy conditions that we've been experiencing over the last significant while and making trading not just challenging, but not much activity at all, seeing as we know how to sit on our hands when conditions are not appropriate for our strategies. Well, that has changed dramatically. You'll recall from some of my recordings and my market reviews over the last couple of weeks how I mentioned that I was surprised that the Russia-Ukraine situation hadn't actually led to more significant market movement. Well, I think it's fair to say that now it has. And not only that, the other slightly confusing missing aspects of market movement over the last few weeks, being particularly a rush to safe haven type securities, including gold, the US dollar fixed income securities, and certainly the US dollar itself, possibly yen. All of these are typical destinations when the market starts getting a little bit afraid of anything that's going on, when they need to avoid risk. And the number one priority of the majority of market participants is the protection of capital rather than the production of a higher alpha return or anything like that. So I think last week we can say that at last that has now all come to pass. And for those of you who have been sitting on your hands and biding your time and keeping your powder dry, I think it should have paid off handsomely to the last week. So let's have a quick look through our market, starting as always with the Euro US dollar on the weekly time frame, where you can see last week's weekly candle was a very significant bearish impulse candle, closing way outside of the channel. And obviously this is on the weekly time frame, so it's certainly possible now to start looking to trade on the daily time frame using core strategies on the daily time frame as execution. Remember, of course, all of those rules. And by the way, I've had a few people ask me about our strategies recently. So if you haven't yet got your hands on the daily impulse, one of the best core strategies around, then please click on the link that I will provide in the notes below this video and get the free training for the daily impulse. It is an absolutely fantastic core strategy and has provided solid returns over the years. And now is the time to get into it. The market conditions are really starting to move favorably towards our daily impulse strategy, providing us with a lot more favorable conditions for that. All right, so that being said, if you're getting value out of this as well, folks, please don't forget to subscribe to the channel and hit that notifications bell. And of course, hit that like button for this video. All right, so getting back into our discussion here, you can see that the daily time frame on Euro USD, we finally had that full breakout of the channel, something we've been waiting for. We noted a week ago how the support level had been tested through that previous week, but then through the course of last week, we had a solid breakout. And I know that many of you are short this market already, using this as your selection time frame, and of course then dropping down to H4. If you're trading the H4 impulse, then without a shadow of a doubt, you would be short on this. And if you're using advanced targeting, then you certainly are doing very well at the moment on the strategy. You would either have gotten in over there, or if you'd bided your time a bit longer, you would have got a slightly bigger position size by entering over here. So that trade's still ongoing. For those of you who hit your take profit, which you would certainly have done, you'll be looking to enter again. If you didn't get the entry over here because of the timing, end of Friday and all of that, then looks like we're getting another good setup coming up in the next few hours. So just keep your eye on that. But there's a lot of instruments that you can trade, but without a shadow of a doubt, the weakest currency at the moment across the board is in fact the euro. So no surprise on that one. You're going to struggle to make sure that you don't overexpose yourself to this currency pair. All right, so moving on to the cable, you can see not quite as weak, but nevertheless, here on the weekly time frame, you can see that last week was also a bearish impulse candle. So it's testing that support level. It should break through it this week. I wouldn't be surprised. Let's put it that way. So here's the support level visible on the daily time frame. You can see as we speak, it's testing that. So nothing well, I mean, if you're trading the H4 impulse, then likewise, if you're outside of the channel, if you're purely a channel trader, you'd be looking to get into this one as well. In fact, you would already be short this market from about 4 a.m. this morning. So that's a good one to be in, and looking certainly really good for a Monday. When you have conditions like this on a Monday, it's definitely a sign that there is a bias in the direction, or a directional bias in the market participants. So we can see that very clearly across many of our favorite trading pairs. All right, dollar yen, however, you can see the correlation over here last week. Nothing really significant at all, and that's to be expected as well, because both of these traditionally are in fact safe haven currency. So nothing for us to do there. And I'm not going to spend too much time on these choppy pairs here on the dollar Swiss. Similarly, and we'll see it when we look at the euro Swiss franc, but the correlation between the euro and the Swiss franc clearly having broken down. This is a very different look to what we were seeing on euro USD, and those typically can be a mirror image of each other. All right, USD CAD, likewise here, weekly time frame, nothing really to go on there at all. There's nothing setting up for us at the moment. Slightly surprised on this one. I would have thought that the Canadian dollar strength would have carried on through, and the reason for that, of course, is Canada is an oil-based economy. All right, so possibly the biggest surprise of last week was the significant strength in both the Aussie pairs and the New Zealand dollar pairs. So here we can see Aussie USD, very strong bullish impulse candle on the weekly time frame, looking like this on daily. Very tradable through the course of last week. I'm sure you guys were making a lot of hay on this one as the sun was shining so brightly. Impulse candle after impulse candle. The only exception, of course, last week, Tuesday, when there was a very slight pullback. But that actually gave you even more opportunity to make the most of that through the course of last week. So that's the Aussie. You can see here on the Kiwi weekly time frame, another very strong bullish impulse candle. And again, here on daily, we've got this bullish cyclicity. The big difference here, of course, if you're a channel trader, noting that we're still inside of the channel, and unlike the Aussie USD, which solidly broke out of that channel early last week. So Aussie USD, great pair to trade through the course of last week, whereas with a Kiwi, you're probably sitting on your hands and just waiting a little bit longer. Here's the euro weakness showing itself again against the yen. Strong bearish impulse candle giving us that breakout. And for the first time in a long time, giving us the potential to be able to trade this with the daily impulse. We certainly did a lot of that in early 2021, but since the middle of last year, we've really left this one alone. So for quite some time, we've not been trading it, certainly not with a daily impulse, and now it is A for away. Daily time frame, nice one here, both channel breakouts, and it was almost a class one pattern. I think we discussed this last week as well. But certainly once we got that channel breakout, and again, another slight pullback on Tuesday. But this one, really, folks, you should be heavily short across all of these. But remember, don't overexpose yourself to one instrument. In this case, the obvious one would be the euro. GBP JPY on the weekly time frame, again, stuck inside of that channel, but a strong bearish impulse candle for last week. So yeah, we can't trade that with a daily impulse or use the daily time frame for execution, but we can certainly use the daily time frame for our selection. And here you can see we do have a class 1M pattern, and we are outside of the channel. So this is great. The only people who won't be trading this are the hyper conservative folks who need to have the point C outside of the channel. That's the only thing we don't have in this particular case here. Otherwise, you certainly should be trading it. All right, so Swiss yen, again, one that I'm not going to waste time on. We've got so many other prettier pictures to look at. Yen strength showing itself, though, on Friday and today. So people seem to be rushing towards their safe havens as we speak. CAD yen, again, nothing to look at here on weekly with that high test. And here on the daily time frame, respecting the resistance level through the course of last week, pulling back inside of the channel. So nothing to look at there either. Here we go, looking at the Aussie strength again on the weekly time frame, strong bullish impulse candle, still inside of the channel, So we'd rather look here at the daily time frame, where again, since we got that breakout last week, Wednesday, this has been eminently tradable. And I know that quite a few of you folks will be long this. Again, the Kiwi weekly time frame, similarly inside of the channel, but a strong bullish impulse candle, but also very much outside of the channel. So for channel traders, you should be trading this as well. Euro GBP. So here we can see there's still some correlation between the euro, and more correlation, I'd say, between the euro and the pound than there is between the euro and the Swiss franc. But we still got that bearish breakout last week with the overall euro weakness. So this is another one where on a weekly time frame, our conditions are suitable to start using daily for execution. You need to wait for all of those conditions to be met. And again, if you don't know what those are for something like the daily impulse, please make use of the Trade Your Perfect Strategy free online trading course that we've got available. You just need to find the link below this video, click on that and subscribe to it. All right, so here on the daily time frame, we got the breakout only, in fact, on Friday. There's no valid M pattern, but if you were looking for a setup, then I would imagine you would either have taken the one earlier this morning, but of course that doesn't meet many of our requirements in terms of the maximum stop level. So we may well be getting a setup at the end of the current 4-hour candle. So keep an eye on that today. But here's the story, of course, of the euro against the Swiss franc. No correlation now between the two visible, with that very strong bearish impulse candle here on the weekly time frame, closing way outside of the channel. So for purely channel traders, again, you'll be looking to short this through the course of the next week or two on the daily impulse. And if you're trading the H4 impulse, where you get a lot more trades, then you would have started trading this already on Tuesday. Wednesday, Thursday, Friday. Yeah, Tuesday. So I should be creaming it on this one. And if you're out of your trades, having hit take profit, then I'm sure you're busy waiting for the next opportunity to get in, which you will potentially have as well at the end of the current candle. So again, watch out for overexposing yourself to any one instrument. Euro Cad, likewise, we're going to see this euro weakness across the board. So this is not unexpected. Again, it's obviously something that you would be looking then to trade using the daily impulse. You just need to wait for all of your conditions to be met. But this is one of those scenarios where if you are sitting on your hands waiting for the conditions to be met in a higher time frame strategy, you should be trading the lower time frame strategy. So again, since we had that close outside this time on Wednesday, you should be short this market, and I know many of you are. So well done on that. So beautiful, beautiful setups. Really, really easy trading conditions. It's the first time I've been able to say that for quite some time. And again, another potential setup with the current candle. Right, Euro Aussie. Well, this is probably the most significant one of the lot. Aussie Strength against Euro weakness. No question about it. Looking at that on the weekly time frame, dropping down to daily. It really is just every single candle was for the last, well, since what's this, the 25th of February, every single candle has been an impulse candle, bearish impulse candle. So this one has been spectacular for those of you trading the H4 impulse, especially if you're using advanced targeting. And in fact, this is an example of where folks who get tired of trying over and over again with advanced targeting, because you'll often find when markets do not have the strength and directional bias that they have at the moment, you tend to make more with fixed targets. But I know some of you have been sticking with the advanced targeting, and you are in huge trades at the moment, particularly here on the Euro Aussie. So that's been a massive one for many of you. Liesel, I know you had a great win on this, so well done. Euro NZD, similar picture again, very strong bearish impulse candle last week, closing outside of the channel as well. So channel traders for daily impulse, you're waiting for it. But again, you know, if you are trading H4 impulse, this one was an absolute beauty through the course of last week. And I know that many of you keyed up on both of those. So two perfect ones with our Euro crosses. And this is an example where it's good to match up the strongest against the weakest pairs. and to leave the rest. I know a lot of you have done that. We've got that spreadsheet for you, which allows you to measure which pairs are strongest and which are weakest using purely price action, not using any indicators at all. And that helps you to strip out those instruments which don't have the same potential as those that do. So those two were definitely the best ones to be in last week and continue to be so. So looking at our GBP crosses now, of course, we know that the momentum on the GBP is not the same as on the euro. But here on the weekly time frame, you can see again on GBP Swiss, there's that strong bearish impulse candle dropping down to daily, very much outside of the channel from Thursday. So if you were trading Friday morning, you would have shorted this already. An example of one where that actually hit the take profit, coming back a bit now. So you can see it's not quite the same as we see on the euro pairs, but still very much a good candidate for shorting the market. So here on the 4-hour time frame, we're not seeing any immediate setups as we are with the euro, but keep an eye on that as well. GBP Cad likewise, strong bearish impulse candle, also showing the Canadian dollar strength with it being an oil-based currency, giving us that breakout on daily at the close of Wednesday. And again, I know that folks have shorted this. We had a gap as well over the weekend, although it was filled this morning. But nevertheless, there you can see that very strong bearish strength. And if you're trading H4 impulse, I know some of you have got the restrictions on the timing for when you trade on Fridays. And this was 4 p.m. on Friday, but I also know some of you have just jumped into that. But for those who got in or are looking to get in again, there's still obviously potential to do that. So do keep an eye. Right, again, coming back to Aussie and Kiwi Strength. Aussie first, strong bearish impulse candle last week. Daily time frame, one direction. Absolutely amazing. Here we've got 1, 2, 3, 4, 5 out of the last 6 candles being impulse candles. And if we go back further, I think there's, what's that? 7 out of 8. So 7 out of 9 being impulse candles. So really quite spectacular, that Aussie Strength over there. Again, perfect for trading the lower time frame strategies, such as the H4 impulse. Here again, GBP NZD, Kiwi Strength, looking like that on daily. Another one where honestly it was making money on these has been easier than falling off a lot. Right, Cad Swiss, not going to waste time on those where which we can just stay away from completely. This being one of them, of course, stuck inside of the channel. Absolutely nothing for us to look at there. And folks, just again as a teaching point, remember one of the big differences, certainly from a technical point of view, between successful and not so successful traders is the ability to identify which conditions are appropriate and, just as importantly, not appropriate for your strategies, and stay away from those where the conditions are not appropriate. So that gives you so much more ammo or powder to be able to use when the markets are appropriate. So here again, Aussie Strength showing itself on Aussie Swiss. Looking at the daily time frame, we had that breakout there on Wednesday. So for those folks who are trading like H4 impulse with the deep targets, with advanced targeting, you're in these trades. Let's have a quick look just to illustrate. We'll be looking from there, dropping down to H4. And immediately, in fact, on the 3rd, you would have entered on this one at 8 a.m. and absolutely perfect. Slight pullback over there, but using the 3-6 rule, you certainly have survived that. You'd have survived all of these pullbacks. And if you're using advanced targeting, you'd still be in the trade with a very nice profit on the table, looking probably at least a 6 or 7 to 1 open reward to risk on this. And if you were trading your fixed targets, then you would have hit take profit, I think, around here, and had a second opportunity to get in here as well. So assuming that you were trading that late on a Friday, of course. But there we go. And if you weren't, then we had another setup about 24 minutes ago, and you'd be long again on this. So don't be afraid to do that. The nice thing, of course, about advanced targeting is that you ride these long, deep movements. But if the market does pull back significantly, you can give up quite a lot of those paper profits. Whereas with the fixed targets, with the standard targeting, you hit the take profits a lot more quickly. You get to take the money off the table, but you miss out on some of these deeper moves and have to enter again with slightly higher risk levels. All right, so Aussie Cad, again, Aussie Strength here, very visible with that bullish impulse candle on the weekly time frame. And again, there you can see from, in fact, it was Thursday morning on this one. No, I beg your pardon. We did have the breakout already here on, what was that, Tuesday. We had that slight pullback with the continuation immediately after that. So not quite as pretty a picture as we saw in the others, with that chop on the Canadian dollar. Again, that's all thanks to that oil price. Aussie Kiwi, nothing doing here for us at all. One of the pairs that we've certainly been avoiding. You can see, though, if we wanted to ask which is strongest out of the Aussie and the Kiwi, well, you can see through the majority of last week, it was the Australian dollar, with the Kiwi taking back some of that ground on Friday. But overall, it's the Aussie dollar, no question about it. Strongest currency last week. So our last two Kiwi crosses here, you can see a nice bullish impulse candle on Kiwi Swiss at the end of last week. And it was Friday where we finally got that breakout. So only this morning would you potentially have been looking for a setup here. And of course, we had quite an interesting first candle of the day here, not really offering us anything when it comes to a favorable entry. So that's fine. We don't mind that at all, but you may well be looking, if you've got enough risk exposure left available, then you risk budget, I should say, then you may look at this, but I do think that there are better instruments to look at. Kiwi Cad Weekly, again, similar picture with a strong bullish impulse candle there on the New Zealand dollar strength. Canadian dollar also showing strength, remember, so another one where it was not quite as interesting as trading against, for instance, the euro or even the pound, with the Canadian dollar also being, or showing some strength last week with these massive increases in the oil price. All right, so that's Kiwi Cad. If you have a risk budget left, you might be looking at that as well. Certainly the conditions are appropriate there on the daily time frame. All right, so looking at gold here, really just to back up what I was saying about folks rushing to their safe havens. Gold is a safe haven instrument. You can see last week we had a strong candle that wasn't an impulse candle simply because we had such a massive wick from the week before. Normally that would be an impulse candle. You can see it even gapped over the weekend and is going one way. That's weekly time frame. Let's look at daily. There's that chop that we saw there on, what was that, the 24th of February, but it's been pretty much going one way after that. And I know there's a few folks who jumped into a daily impulse on this one already. Otherwise, if you're only trading H4 impulse, then you would have been doing that certainly through the course of last week. We saw again a bit of flat movement here for a part of the week. But even if you got stopped out on a trade there and managed to get in again around here somewhere, certainly if you're using advanced targeting, you'd be on a massive unrealized profit on that trade. And if you were trading with a take profit, would have gone straight there for a very nice winner. So either way. Right, looking at our indices, I'm a little bit surprised that the US stock markets have not had the bottom fall out of them yet. Again, remember, I'm not a predictive trader. I'll wait for conditions or the markets to prove themselves to me. And here's an example of where they didn't really do that. So we didn't get a breakout of the channel last week. We've had 2 tests, or 3 counting. If we go back to January, we've had 3 tests of the support level. And well, it's still Monday. Let's see what happens through the course of this week. But I think that support level personally is destined to be broken. Unless something massive happens and Putin pulls in his horns. Let's see what goes on there. But nothing really for us to do. If you wanted to look at trading an aggressive hybrid on this, well, I think you'd already, would you be in? Yes, with a class 3 pattern, you would have probably shorted this one first thing this morning. But otherwise, you need to sit on your hands and wait a bit longer. That would be a very aggressive trade. And pretty much the same thing going for S&P 500. Remember, the S&P and the DAX tend to be slightly further ahead of the Dow, which is a bit more sluggish. But nevertheless, a similar picture, quite a lot of chop in the markets over here last week, all in a phase 2 retracement wave. So you wouldn't have been doing anything. We did get ultimately almost got a class 1 M pattern here, but it didn't quite make it. So looking for that bearish breakout. And of course, a little bit more aggressive in a bearish direction is the NASDAQ. Weekly time frame, we've got that bearish high test closing all the way back down near the bottom of last week's candle, with Wednesday and Thursday being significantly bearish. And also, of course, Friday giving us finally a breakout of our channel. So for those of you who are trading the indices, this would be something you would have been looking at, or will be looking at, to get into today, probably to short this one. But as I say, there are others that are better looking than that. And of course, the big story is being oil. Last week's bullish impulse candle, one of the longest and strongest impulse candles that oil has produced in a very, well, it is the longest and strongest weekly candle that has produced for many years. So it's definitely interesting times that we are living in, as the good old Chinese curse goes, with a huge gap over the weekend. It's coming back slightly this morning. Let's see what happens there, but this is obviously going to have a significant economic impact. So much as people don't like using fossil fuels and want to go green, oil is still the #1 driver of the world's economy. So let's see what happens here. If that continues to go up, we are in for a massive recession, and we're going to see those market indices crashing as well. So if you're trading oil, and I know some of you are in the group, I can't remember who it was, one of you folks was jumping up and down with joy, asking about who is making all the money on oil. So well done to you if you have capitalized on that and got over that chop that we had the previous week. So it's been pretty good. Just a quick look at daily while we're here as well. So it has been, hasn't been all plain sailing, obviously, with the game Thursday coming back slightly, but very strong movement over here, no question about it. So well done to you folks who traded it. Somebody got in on Friday as well. I think it just made it into your cutoff with this class 3 pattern with a bullish impulse candle here on the H4 time frame, and you would have capitalized on that gap over the weekend. So definitely ballsy, but it worked out, no question. Right, Bitcoin, not so much. Won't waste time on this. This is just going sideways. Our trade on daily impulse that we had before, ultimately we got stopped out there on Friday. So just showing where it was previously, but it was a break-even trade, so I'm perfectly happy with it. Look, things move on. We've got other fish to fry now. I'm not interested in that anymore. So let's just keep an eye on it, though. It might present some more trading opportunities in the next couple of weeks. US Treasury Bills, not a surprise here at all. Remember, I mentioned earlier, one of the biggest safe haven destinations for investors are US Treasury Bills. And you can see last week's bullish impulse candle on weekly representing that. We're still overall in a bearish trend here, of course. Technically, from a technical perspective, we're in a phase 2 of that. Let's wait and see what happens. We bide our time. And here's the daily time frame. We had that breakdown in sequentiality and cyclicity, as we know from our previous sessions. Testing the top of the channel. That's interesting to see how nicely our HTC method does help represent the most significant support and resistance levels. And I'm sure you'll agree with me that that's nice to know. So yeah, this on the daily time frame, bullish cyclicity is still very much intact. So let's see what happens there. Right, folks. Well, that's it from me. Again, if you enjoyed today's session, please don't forget to hit the like button. If you're not already a subscriber to our channel and you'd like to have access to high quality professional market updates and trading tips, as well as be guided on strategy development and even trading rules, make sure that you do subscribe to our channel and hit that notifications bell so that you know when we bring out, or whenever we do bring out new material, you have instant access to it. All right, folks, remember, as always, keep your risk contained. Make sure that you always manage risk first and let the upside look after itself, because it does tend to. But in these volatile times, it's important, as always, to manage downside, but you also need to make hay while the sun shines. So do that, but do it the right way. All right, folks, have a fantastic week's trading. Look forward to chatting to you all soon. Bye for now.